Hello, it's Sunday, September 11th, 2011, and I'm Sam Jones with the Daily Outlook from UFXBank. Today, the biggest mover and shaker of the week was the Swiss franc. The franc traded at almost the weakest level since July after tumbling early this month when the Swiss National Bank established a franc ceiling at 1.20 per euro. The Swissy fell against the euro and the US dollar on Wednesday. The US dollar was up against the Swiss franc on Thursday, trading close to a 3.5-month high. While the euro has taken a beating in recent years, the Swiss franc has risen in value, appreciating more than 16% just this year. The cable fell 1.3% and the dollar dropped 12%. Over the past year, the value of the franc rose 16% against the euro and 30% versus the dollar. The Swiss government expects slower growth rate next year, anticipating a 1.5% expansion in 2012. Whether it sustains is, of course, another issue. The Swiss National Bank can, as a national bank, print as much currency as it needs to discourage investors who want to hold Swiss francs as a safe haven. The downside is that such a move risks inflation. The move is putting more pressure on currencies of Norway and Sweden, which are also viewed as safe havens. The Norwegian krone has already strengthened 4.5% against that same basket of 9 currencies this year. On Tuesday, the krone hit its maximum level against the euro since February 2003, while Sweden's currency has also strengthened. Japan is battling a soaring yen. The government has said that it will focus on the dangers of the rising yen at the meeting of G7 finance ministers and central bank governors this week in France. While Japan could copy the Swiss decision to print unlimited amounts of yen, the decision could have a much greater impact on the global economy, since Japan is the 3rd largest economy in the world, while Switzerland is only the 19th. That's all for today. Be sure to visit us at UFXBank.com for simple, safe, secure trading.